Listen, I'm going to tell you something that could save your financial life. After 40 years of investing, building multiple companies from scratch, and seeing thousands of deals on Shark Tank, I can predict with absolute certainty that 2026 is going to be a bloodbath for investors who make these five catastrophic mistakes. I don't care how much money you have right now. I don't care how confident you feel about your investment strategy. If you put your money into any of these five things, you're going to get destroyed, completely wiped out. I'm Kevin O'Leary, and I didn't get to where I am by following the crowd or believing the latest financial fairy tales. I got here by understanding real value versus garbage wrapped in fancy marketing and smooth-talking salespeople. Right now, heading into 2026, I'm seeing some of the most dangerous investment traps in my entire career. The scary part? Most people are walking straight into them with their eyes wide open, convinced they're being smart. You know what separates the wealthy from everyone else? We don't fall for get-rich-quick schemes. We don't chase shiny objects. We understand that every dollar we invest has to work for us, has to generate returns, has to compound over time. If it doesn't meet those criteria, we don't touch it. But before I save you from financial suicide, I need you to do something for me. If you're serious about protecting your wealth, if you want to learn how to think like a real investor instead of a gambler, hit that subscribe button right now. Join this community of people who understand that money isn't a game. We don't chase shiny objects here. We build real wealth through discipline and intelligence. So subscribe, because what I'm about to share with you could be the difference between retiring wealthy and working until you die. Now, let me start with the first investment that's going to destroy portfolios in 2026. And this one is going to make a lot of people angry because they're already losing money on it and they don't want to admit it. The first wealth destroyer of 2026 is speculative cryptocurrency trading. I'm not talking about serious long-term positions in Bitcoin or Ethereum. I'm talking about day trading obscure altcoins, chasing the next Dogecoin, throwing money at whatever crypto influencer is pumping this week. These people think they're investors. They're not. They're gamblers with smartphones. Here's what's coming in 2026. The regulatory hammer is dropping hard. We're going to see massive crackdowns, exchange shutdowns, and projects disappearing overnight, taking billions with them. The people who get hurt won't be smart money that got in early. It'll be retail investors who bought the hype. Over 95% of altcoins launched in the last 3 years have lost more than 90% of their value. You could have thrown your money in a fire and gotten the same result. But people keep buying because some influencer with a Lamborghini told them this is the next Bitcoin. Listen carefully. There is no next Bitcoin. There are only imitators. The crypto market has become a playground for scammers and pump-and-dump schemes. If you're throwing money at random coins hoping to get rich quick, you're not an investor. You're a mark in a con game. Now, I can already hear the crypto fanatics typing angry comments. But Kevin, blockchain technology is revolutionary. Yes, it is. And you know who's going to profit from that revolution? The companies that build the infrastructure, the businesses that integrate blockchain into real-world applications, not the speculators buying worthless tokens with dog memes on them. If you want to invest in the future of finance, invest in established companies that are building real blockchain solutions, invest in payment processors, invest in financial services companies that are adapting to digital currencies. But for the love of all that's holy, stop throwing money at coins named after cartoon characters. But that brings me to the second catastrophic investment mistake that's going to bankrupt people in 2026. And this one might be even worse because it's targeting younger investors who think they're being smart. The second wealth destroyer is meme stocks and social media-driven trading frenzies. Remember GameStop and AMC? Those weren't investment opportunities. Those were pyramid schemes disguised as populist movements. They're coming back in 2026, more sophisticated and more dangerous. Here's how the scam works. Coordinated traders identify a struggling company with high short interest, create a narrative about sticking it to Wall Street, flood social media with posts about diamond hands, then regular people pour their life savings into these companies because they want to be part of something bigger. But the people organizing these movements aren't your friends. They're using you as exit liquidity. They buy early when the stock is cheap, pump it with social media campaigns, then sell to you at inflated prices while telling you to hold forever. I've met victims of these schemes, teachers who lost pension funds, nurses who mortgaged homes, construction workers who cashed out 401ks because they believed the hype. The companies they target are fundamentally broken. GameStop was a dying retailer. AMC was a theater chain during a pandemic. These weren't investments. They were speculation based on mob psychology. And in 2026, it's going to happen again. Different companies, same playbook. And the people who get hurt won't be the hedge funds or the Wall Street elite. It'll be teachers and nurses and construction workers who believed the hype and lost their retirement savings chasing internet points and social media approval. If you want to make real money, ignore the noise. Invest in companies with actual business models, actual revenues, actual profits. Boring companies that make boring products and boring profits year after year. That's how you build wealth, not by joining internet mobs led by anonymous accounts with cartoon avatars. Now, are you starting to see the pattern here? Because it gets worse. The third investment disaster of 2026 is going to catch even experienced investors off guard. The third wealth destroyer is real estate speculation in bubble markets. Before you say real estate always goes up, let me remind you of 2008. I lived through it. It can go down. It will go down. And in 2026, it's going down hard in markets completely detached from economic reality. I'm talking about markets where median home prices are 10, 12, 15 times median income. Places where people buy investment properties they've never seen with money they don't have, based on YouTube videos about real estate riches. Here's the truth about real estate bubbles. They always end the same way. Prices get so high that actual users get priced out completely. When that happens, you have speculators trading with each other at ever higher prices until someone figures out the emperor has no clothes. When real estate bubbles burst, they don't deflate slowly, they collapse violently. Properties worth $1 million become worth half that overnight. Investors who thought they were building wealth discover they're underwater on multiple properties with no way out except bankruptcy. What makes this crash more dangerous? Interest rates. For over a decade, artificially low rates made it easy to borrow for speculation. Those days are over. High property prices plus high interest rates equals toxic wealth destruction. Now, does this mean all real estate is bad? Absolutely not. If you're buying a home to live in a market where you can afford the payments, that's fine. If you're buying rental property in markets where the rent covers the mortgage and expenses, that could work. But if you're buying properties just because prices have been going up, if you're counting on appreciation to make your investment work, you're not investing, you're speculating. And 2026 is going to teach a lot of speculators very expensive lessons. If you're still with me, if this is making sense to you, then you need to hit that like button right now. You need to share this video because I guarantee you know someone who's making these exact mistakes. And trust me, the next two investment disasters I'm going to reveal are even more dangerous because they're targeting the people who think they're being careful and conservative. The fourth wealth destroyer of 2026 is something that's going to shock you because it involves companies that everyone thinks are safe investments. The fourth catastrophic mistake is buying overvalued technology stocks without understanding their fundamentals. Companies trading at 50, 100, 200 times earnings if they have any earnings at all. Companies priced for perfection in an imperfect world based entirely on hope and hype rather than actual results. During the dot-com bubble of 2000, smart people convinced themselves that traditional valuation metrics didn't matter anymore. They bought companies with no profits at absurd prices because they believed the internet changed everything. Then reality hit. Companies worth billions became worthless practically overnight. We're seeing the exact same mentality today with different buzzwords: AI revolution, clean energy revolution, biotech revolution. Same promises, same inevitable ending. Technology is important. Some companies will succeed and generate enormous returns, but the market is pricing these stocks as if every single one is guaranteed to be the next Apple. That's not how business works. Most technology startups fail. Even successful ones take years to justify initial valuations. Investors who paid ridiculous prices get crushed when reality sets in. I've seen this movie before. I know how it ends. In 2026, when interest rates stay high and economic growth slows down, when investors start demanding actual profits instead of growth stories, these overvalued technology stocks are going to collapse. The companies with real businesses and real profits will survive. The rest will become cautionary tales, and the people who get hurt the most won't be the venture capitalists who got in early. It'll be the retail investors who bought at the top because they read an article about how artificial intelligence is going to change everything. Here's my advice. If you want to invest in technology, invest in profitable technology companies trading at reasonable valuations. Companies that make actual money from actual customers. Companies that have survived previous downturns. Don't chase the hot new thing. Don't buy stocks because someone on CNBC said they're the future. Buy stocks because the companies are well-run businesses that generate cash flow. But the fifth and final investment disaster of 2026 might be the most dangerous of all because it targets the people who are trying to be responsible and diversified. The fifth wealth destroyer is Forex trading and leveraged derivatives. This is financial Russian roulette being marketed to regular people as a legitimate way to build wealth. Here's the scam. Companies advertise that you can trade foreign currencies with massive leverage. They show charts of potential profits, make it look easy and safe. But they don't tell you that over 80% of retail Forex traders lose money. The spreads, leverage, volatility, and manipulation by institutional players, everything is stacked against you. When you trade Forex with leverage, you're gambling with borrowed money. You don't just lose what you put in, you can lose more than you have. You can owe money to the brokerage. You can destroy your financial life in hours. I've met doctors and engineers who lost homes, retirement savings, children's college funds because they thought they could outsmart foreign exchange markets. And in 2026, as economic uncertainty increases, as currencies become more volatile, more people are going to be tempted by these get-rich-quick schemes. More people are going to think they can predict whether the dollar will go up or down against the euro. More people are going to blow up their accounts and their lives. Listen to me very carefully. Currency trading is not investing. It's speculation at best, gambling at worst. If you want to protect yourself against currency fluctuations, buy international stocks or international bonds. If you want to hedge against dollar weakness, buy real estate or commodities. But don't try to profit from short-term currency movements unless you enjoy losing money. So these 5 wealth destroyers will bankrupt investors in 2026. Speculative crypto trading, meme stocks, real estate speculation, overvalued tech stocks, and Forex trading with leverage. What do they have in common? They're all get-rich-quick schemes disguised as investments. They promise easy money with minimal risk, targeting people who want to believe wealth can be achieved without patience, research, or discipline. Building wealth is boring. It's slow. It requires buying quality companies at reasonable prices and holding them for years. It requires diversifying across asset classes. It requires saving more than you spend and investing in productive assets. There are no shortcuts, no secret strategies, no magic formulas, only the time-tested approach of buying assets that generate income and appreciate over time. If you want real wealth, ignore the noise. Focus on diversified portfolios of stocks, bonds, and real estate. Focus on companies with strong balance sheets and growing dividends. Focus on markets you understand. And focus on time. The earlier you start, the longer your money compounds, the wealthier you become. But waste time chasing these 5 disasters, and you'll start over at zero while others build generational wealth. Now, if this video has opened your eyes to the dangers lurking in today's investment landscape, if you're ready to stop gambling and start investing like a serious person, I need you to take action right now. Don't just watch this video and forget about it. Don't just nod your head and go back to making the same mistakes. First, smash that like button to tell the algorithm that this message matters. Share this video with someone you care about because I absolutely guarantee they need to hear this warning. They might be making one of these 5 mistakes right now without even realizing it. Second, leave a comment below and tell me which of these 5 investment traps you've seen your friends and family falling into. Be honest, we're all learning here. Have you seen people get burned by crypto speculation? Do you know someone who lost money on meme stocks? Are your neighbors over-leveraged in real estate? Tell me your stories. And if you haven't subscribed yet, what are you possibly waiting for? Hit that subscribe button and join a community of serious investors who understand that wealth is built through discipline, patience, and smart decision-making, not through luck, hope, or following the crowd. But most importantly, take what you've learned today and actually do something with it. If you're currently making any of these 5 mistakes, stop right now, today. Don't wait until tomorrow. Don't wait until next week. Don't wait until you lose even more money. Cut your losses and redirect that capital into productive assets that actually generate income and appreciate in value over time. Remember, 2026 is going to separate the real investors from the speculators. It's going to reward patience and punish greed. It's going to favor the prepared and destroy the reckless. Which side do you want to be on? The choice is yours. You can keep chasing the next hot investment, or you can start building a portfolio that will actually make you wealthy. You can keep gambling with your future, or you can start investing in it. Make the smart choice. Avoid these 5 wealth destroyers. Build something that lasts. Your future self will thank you for it. Now get out there and make it happen.